GameStop's business model is doomed to fail unless the company does a massive turnaround soon. Most game sales are going digital over physical, and this trend cuts out GameStop. I don't believe that the company will survive in the long term, but to be honest, I don't really care if it does. At the current price, the stock is more of an opportunistic value investment where it's possible that the future cash flows exceed the current market cap of the entire company. This slightly positive news may lead to a short squeeze, thereby sending the stock price much higher as the shorts have to buy to cover their positions. GameStop isn't a buy and hold type of investment in my opinion. Once the stock reaches a price that I hope it achieves, which is at around a 2 to 300% return, I will be selling out of my position entirely. Let's go over why I think this position could return at least 300%. So a lot of people have recently gotten interested in gaming due to the stay-at-home quarantine. This is a positive trend for the gaming industry overall and may slightly benefit GameStop sales too. Historically, Q4 has been the strongest quarter for GameStop. The thing that's different for this year is that we will be getting new gaming consoles, the PlayStation and the Xbox from Sony and Microsoft, and this should translate to higher revenues for GameStop in the last quarter within December. Typically, we can see that the stock has done well every time that new gaming consoles are released. There are two main catalysts that I'm looking at that could send the share price much higher in the short to medium term. The first catalyst is that activist investors have recently taken a stake in GameStop. Generally, when activist investors take positions in companies, it's because they believe that the existing management could do a better job to increase the value to shareholders. GameStop currently has $570 million in cash reserves, a figure that will hopefully increase in Q4 as the sales and revenues increase and will be used to increase shareholder value through either buyback or distribution of profits. An announcement of the buyback program alone would push the stock much higher as the market is forward-looking and could see this as a turnaround for the company. The second large catalyst that the stock has to potentially return 300% or more is the fact that 97.7% of the total outstanding shares are currently shorted. That means a lot of investors are expecting GameStop to go down further. To add some perspective to this, Tesla's total shorts were approximately 25% on average of the total outstanding shares when the stock experienced a short squeeze and went from $300 to over $1,500. And this change from $300 to $1,500 was just in a few months. We could see GameStop shares going from the $4 range to anywhere between $16 or maybe as high as $30 depending on the market conditions at that point. This is an extremely speculative position. That's why I have invested only a small percentage of my portfolio into it, but it's definitely an interesting opportunity in this market. There is an asymmetric benefit that comes to buying GameStop at this point. What I mean is that if someone were to invest $1,000 into GameStop stock, they could potentially lose $500, which is 50% of their total investment. But if the catalysts do play out as expected, then by December or March, the gain would be as high as $4,000 on the initial $1,000 investment for a total return of $5,000.